Good,
So I
good.
can so I can see we're now live on YouTube. Excellent.
Well, it's setting up.
Where did you get that?
11 o'clock now, so but just a minute.
Nice time, Mr. Sayed.
All right, we're on.
Thank you. How are you, Richard?
Very well, thank you. How are you?
Good, good, good. All good. I was telling Barani that, we're 400 people and a lot of questions in Ethiopia. She wanted to run away.
It's the people's person, so that's okay.
I see we have people joining us. Thank you and welcome. We will give it another minute to allow for more people to join in and settle in, and then we'll get started. But in the meantime, welcome.
Anyone wants to invest in this company?
What's that? I think we can get started now. Thank you everybody for joining the East Africa Venture Capital Association today. We are very pleased to see you all this morning for this web panel discussion looking at the deal landscape across East Africa, and in particular Uganda, Tanzania, and Ethiopia. For those unfamiliar with the East Africa Venture Capital Association, we're the industry voice for private equity and venture capital in East Africa, representing about 100 member firms across Kenya, Uganda, Rwanda, Ethiopia, and Tanzania. And we support the industry cutting across our four main pillars: advocacy, research, training, where our mandate lies in developing the capacity of practitioners in the industry, as well as convenings such as these, where we have leaders of industry and thought leaders and the wider network come together and share best practices and information around doing deals in this region, in this exciting region, East Africa. Today we are joined by a fantastic panel. We have Berhane Demissie, who's managing partner at CPS Partners, Growth Capital Partners. We have Abdul, who's the partner at Bankable in Tanzania. We have Richard Mugera, he heads up Ascent in Uganda. And this panel discussion will be moderated by Michael Strain, who sits out of Dar es Salaam in Tanzania. And I'm delighted to have you all today. Thank you so much. And with that, I will hand over the virtual microphone to Michael. Thank you.
Excellent. Thank you so much, Esther. And welcome everyone to what we hope will be an exciting and interesting session. I was very pleased to say when Esther told me we had a record number of people sign up for this webinar. I think we're close to 400. So yeah, so interesting times. Well, I think we're going to kick off things with a question for everyone. And this is more of a kind of general one, which is, it's been a strange few months. What is the current state of the business environment in the various countries that we're sitting in? Where are we with lockdown restrictions? And do we have any feelers yet as to when we can expect to return to some semblance of normality? Bahane, perhaps if you were able to kick us off on that one.
Okay, thank you, Michael. So in Ethiopia, as you may know, there's no such lockdown restrictions. Actually, the government has actually required all manufacturing companies not to close down, and also has stopped any firing of employees because of COVID. So companies are continuing to work. Therefore, the challenge has been to make sure that every precaution is taken at the business operation level to minimize the spread. What has affected businesses from our experience is the quarantine requirement for international travel. So we had to put on hold contracts with the international service providers from coming and doing the work and trying to accommodate also remotely the work that we want them to do. So that's been like the major problem for us in getting third-party service providers to come in. So when do we go back to normality? We don't know. So we're trying to accommodate this new working order by trying to do as much as possible remotely. So it's not clear when we'll be coming back to normality. So when you go into different businesses, the companies are still working and shifts and online as much as possible, but there's no such lockdown in the country.
Okay. And so there's no sense of when the quarantine might be relaxed at this stage?
No, there isn't.
No, very good, helpful to know. I should just also add for our attendees, we do have a Q&A function. You can see it at the top of your screen. So please feel free to drop the questions in as and when they arise. The intention is to have some time for Q&A at the end. But of course, if anything's particularly pertinent, we may try and drop it in at an appropriate time before then. But Richard, over to you. Where are things kind of sitting generally in Uganda at the moment?
Thanks, Michael. And I wanted to thank Esther for that wonderful introduction. We certainly sound like, the professionals that we are. Yeah, but unlike Ethiopia, I think Uganda, as you all are aware, really locked down. We had 49 days of zero movement, basically. Only essential people were allowed to move. Essential businesses, essential services. So we had a full lockdown, no public offices open. And then we had curfew, even for those that had authority to move around, had still curfew that started at 7 p.m. and ended at 6:30 in the morning. 2 weeks ago, it was relaxed. Basically, we have minimum movement. We have public transport that's been allowed to operate. Motorcycles have been allowed to operate, but still now up until 9 p.m. What does that mean for business? That means that if your business was operating for 18 hours, strictly right now you're operating for 6 hours because you have to allow your employees to come to work and you have to allow them to get back home so that they don't basically fall into curfew. And it's been really strict. I think there was, on the social media, we heard that the security services were more, basically were a bigger fear than the COVID itself, because I think people died because of the security services trying to make sure that presidential directives are being adhered to, more than the number of people we've lost to COVID, I think, which is about 2 people to date as of the 29th of
okay.
Yeah.
And in terms of a return to a semblance of normality, or I know there is, we're seeing case numbers kind of escalate in Kenya at the moment. Is that what you're seeing in Uganda? Or are things starting to increase with this relaxation in lockdown?
Well, I think it's not really escalated that much. I would say the numbers are growing much faster than they were in the 49 days of lockdown, but not to the scale of our neighboring countries. For example, what's happening in Kenya or what's happening in South Africa is totally different from what we see here. And that's strictly because there's quite a lot of SOPs that have been put in place about social distancing, about public hygiene management. So we haven't seen that. It could be that we're not testing as much. I don't know, because what we see is that we were testing a lot of truck drivers that were coming in from neighboring countries mostly, and then contact tracing, basically those people that have been in contact with those truck drivers, because most of the cases that we've seen in Uganda were from truck drivers from Tanzania and Kenya.
Very interesting, and it's so interesting, isn't it, when you look at the contrasting stories that are coming out of the region, and I'm sure that'll be one of the really interesting themes that comes out of today's discussion. And Abdul, turning then to Tanzania and Dar. I mean, I know you and I are both sat here in the office. I mean, what's your take on things? I mean, current state of business environment. I mean, I know we're saying, do we have a feel as yet when we expect to return to some semblance of normality? I mean, are we there already?
Thanks, Michael. I think Tanzania has been the same like Ethiopia. I don't think we took any extreme measures when it came to COVID. I think there were some minimal impact on our business, in a sense that we did have, I think immediately when we started seeing some of the cases around the region and Tanzania going up, the measures the government took, I think the schools were closed for a short period of time. I think there was a month or just over a month. We had obviously the borders closed. And I think, during our peak time, which in my opinion was around May, some of the restaurants and bars were ordered to close for a short period. But I think since then, things have been back to normal. There was no curfews set by the government. And I think our president did say straightforward that he's not gonna order any lockdown in the region. Business are open for everyone who wants to do business. But obviously, I think as good citizens and businesses in the country, some of the people took, the necessary measures, working from home, reducing the number of hours the employees needed to be in the office. So some of the people going to paid leave, unpaid leave. But since then, to be honest, I think things are back to normal. We've been back in the office probably over a month right now. And things we see the same for the rest. We've been attending meetings, some necessary precautions that we know continue to take place, sanitize, distance, where you can, we still do Zoom and Teams calls. But generally, we are, as a country, we're open for business. Our borders right now are open, probably close to about 3-4 weeks now. Some international flights resuming. Kenya Airways, I believe, will be starting on 1st. Emirates already, I think they're going to start on the 2nd of August. And a number of flights really have already started. The one big impact, I think, will have been obviously because of the international travel and tourism. But even with that, right now, we're seeing tourists coming into the country. Some hotels are already being open. The big hotels, the corporate hotels, and the beach hotels are open for business. So we are seeing some signs, strong signs of being back to normal. We're not hoping that, as a country and as a region, we'll not be hit by a second wave that will impact our economy.
No, indeed, absolutely. So now to try and sort of dive a little bit more into some granular detail. But Bahane, you successfully closed the Lion Brands deal in May. So obviously, a proper closing, during some of the most difficult times for COVID. Can you tell us about this? Were there any particular challenges that you saw, even just logistical, practical challenges? I mean, certainly for us, we've seen some quite special things that have needed to happen. And do you think COVID's going to materially affect your investment strategy over the coming months?
Okay, so just to give a background of the company for everyone on the call, it is one of the leading manufacturers of home care, personal care, and food products in the country, where the population size in Ethiopia is about 110 million. So we had actually started working on this investment prior to COVID pandemic and made the investment just recently. So we had good visibility on the impact COVID had on the business prior to our actual investment. So that was an advantage for us to see how we can go into the investment once we invested. The home care and personal care products, have seen dramatic increase in demand due to COVID. because people's hygiene awareness has increased in the country. So they need the soaps, the bleaches and all those products that they need for in relation to COVID. So therefore, we did not have to make a material adjustment to our investment strategy. We had to, however, review the product mix of the company to ensure that what we being manufactured meets the current increased product mix in the market. So what the demand is in the market. So this includes, for example, increasing production of our hand sanitizer products, keeping other products at same level if the increase in demand has not been seen due to COVID. And the third one has been really looking at diversifying product distribution outlets to cater for people who no longer want to travel to get the products they need. So it hasn't been material, but it's just really focusing on the product mix that we've seen an increased demand due to hygiene awareness of the population. The other aspect that we had to look at was in terms of the actual operation of the company. Since because of COVID and prior to our investment, what we've seen is a disruption of supply chain. And so even though China has come back to produce goods and send to Ethiopia, we were very concerned about ensuring diversified input suppliers, the different options, because as we've seen in the US, COVID can flare up again anytime in any country. So one of the major things that we had to think about is if China does close down again, what are the different sources for inputs, and really starting the relationships in those different countries to make sure that we can really switch from one country to another should COVID come back into any of those countries. So that's really the major change that we've done due to COVID impact.
Okay, and in terms of just the practical, this is probably just me with my lawyer's hat on, in terms of just practically closing the deal, did you experience any kind of major challenges with that? Was it all done remotely, or did you have a kind of physical meeting? I mean, one of the interesting challenges that we saw a couple of months ago, we were trying to get some original documents for a closing up from Malawi. And because DHL had briefly actually even stopped servicing Malawi, we ended up having those documents. Someone took them on a minibus to the border with Tanzania, and then we sent someone down on the bus to go and pick them up and bring them back to Dar es Salaam, which it all worked. Yeah. But I just wondered if there were any kind of practical logistical issues that you had.
The advantage we had was even though flights were not working, Ethiopian Airlines was very active on cargo in many African countries. So we could get deliveries, for example, from Mauritius or other countries to have the documents on the ground. And but we did most of the negotiation, finalization of the document, remotely. And we only met once to actually sign the document because the registration of the transaction needs original signatures. So we had to make one, but most of it was done remotely, and we didn't see issues of getting documents from abroad to have it done.
Okay, excellent. Well, and just congratulations again for closing something like this and in such a challenging time. Yes. Richard, then kind of switching over to Uganda. And we talked about some of the challenges with your pretty hardcore lockdown. Has that and the kind of COVID situation generally brought any particular challenges for you with portfolio management? Issues with the with the various companies that you guys are invested in? Oh, sorry, Richard, I think you're on mute.
Yes, thanks for that. Absolutely. The extreme lockdown obviously has affected all our businesses. I think in two of them, we've been down up to about 75% in terms of expected revenues. We haven't obviously made targets in the last quarter, but that's because of the hours available for us to work. If you have a lockdown that, basically if curfew lets you get out of the house at 6:30, and everyone is in a rush. If you have 2 million people trying to get to the city, you can imagine the kind of traffic jams, that are all around, the city. So it's chock block, and that means
Kampala's bad enough in normal times.
Exactly. So now think about everyone is rushing in, trying to get the early warm, and then rushing out so that curfew doesn't hit them, because we have people who stay as far as 30, 45 kilometers out of the city who come in and commute. And the fact that public transport, if a van was carrying 13 passengers, now they're allowed to carry probably only 8. So there's been a little bit of a strain on that. And then our usual borders, you all know the borders, which is motorcycle transport. They've not been allowed to carry passengers until 2 days ago. Wow. So it's been really tight. And so, yes, working hours have been strained. Employees can't get to work. Data connectivity for people to work from home has just been extremely strained. I mean, it's been really difficult for some of us to even have a Zoom call because of the strain on capacity. MTN has been, basically incapacitated because of the demand on data services. So we've seen all those strains, but it's all a new norm. We're learning how to deal with, working fewer hours. We're learning how to deal with working with half budgets. We're learning how to manage our employees without letting them off. Just like, Barani mentioned that, the governments really don't allow that you let people go. And therefore, we've been trying to manage schedules for all employees to be able to get, work time, and so that they still get on the payroll. Our management teams have taken a huge cutback on their wages, and basically that's been across the board. So there's a lot of fluid things that we're dealing with. And remember, we had planned that hopefully we are back to normal August 1. I think tomorrow, the day after, is August 1. And far away from that. We thought the airports would be open. We don't see that, coming up. And then that means now we have to go back to the drawing board and basically look at phase 2 of our budgeting processes, our strategic movements in the companies, and basically plan for this to go on possibly even up to January 2021. So that's the position we're in. It's really tough, and that also puts a strain, obviously, to our investors if they don't know what returns are going to be like.
No, well, it's just the uncertainty of so many different variables that it just makes it impossible to plan, doesn't it? And in terms of trying to look to a sense, are there regular reviews taking place of the restrictions that are in place? And is there going to be a review taking place again soon, which could lead to further relaxation for you? Or
I think social pressures pushing for an informal cutback on the hours. I think we have a formal curfew now from 9 p.m. to 5 a.m. But if you're in Kampala at 11, close to midnight, you still see, traffic, which means that government has really relaxed. I mean, the paramilitary forces have been moved off the streets. So you don't have that kind of rigidity in terms of movement, although it's still, status quo 9 to 5. But you feel that they're not really pressing people to be back at home before 9 p.m. So yes, we're taking advantage of that. People are closing shop at 9 p.m. Where they would usually have had to close them, say 6 or 7 p.m.
Okay.
And so everyone is trying to pinch here and there to try and take advantage and hopefully force some kind of normality. But as Mr. Said said, hotels are at half open. There's no bars open. Like Nairobi, I think they're not serving alcohol. You're not allowed to serve, really alcohol anymore in bars in Uganda either. So people are changing basically socially and adapting to the new norm.
Okay, well, good to hear that there's some potential for some further, easing of restrictions on the horizon, but certainly sounds challenging. And so then flipping to Abdul, so we talked, things seem, as we said, kind of largely back to normal in Dar from a sort of day-to-day perspective. I mean, how do you think Tanzania is being viewed as an investment destination at the moment, particularly in light of, the current situation?
Thanks, Michael. I think, Richard, unlike Uganda, bars are open in Tanzania. So every, business is usual in Tanzania.
Yeah.
So Michael, I think that's a good question. I think I'll say then how investors view Tanzania as a business destination is a mix. And I think this really depends on, the information that, a particular investor has where they are, right? I mean, if you have an investor who's really depending on the news or reading articles, I think they may have a negative kind of view about Tanzania. But for investors who are working with the right partners in the country, the right financial intermediaries, be banks, brokers, advisors, I think, they'll have kind of different sort of sense of what's happening in Tanzania. I mean, if you come a pre-COVID period, we've been really turning the dial on business environment. I mean, it's no secret that, the Barrick transaction was so, a big thing that was hanging around, externally and probably bringing the negativity in the country. But, that deal has been settled. Some of the sectors really have shown decent growth over the past 3-4 years. I mean, you talk about agriculture, agro-processing, manufacturing, mining and transport. Surprisingly, mining is, one of the sectors that really showing positivity. There's a new way that traders can now trade gold in the country instead of going directly to the miners. They can go to the exchange and do business. I think that has been really simple and easier and more transparent. So some of these things, I think an external investor will only know about unless, they speak with the right person in the country. I mean, post-COVID, I think like, the rest of the world, there has been a slowdown. But I think internally, the business, are picking up where they left really, from an institution perspective, we're definitely, seeing clients back from business. They want to push, right now they're even pushing for face-to-face meetings. We are off to Arusha next week to visit a few clients who want to really start, executing some of the ideas we discussed with them, pre-COVID period. So I think things are really back to normal now. Now, I think, some of the external investors who are looking to Tanzania, I think they're still stuck or they're still dealing with some of the issues happening probably in their countries. If you talk about the large banks in the Middle East, I think there are a lot of consolidation happening. So somehow they have stopped looking in this region. Even some of the investors, if you see what's happening in Oman, it's very tight when it comes to the oil price. So, but generally, I think it's in my opinion, it's positive. And I think, most of the investors that, even this week, some of the guys that we've talked to, some of the transactions that we've been trying to communicate with some of the PE funds, there was a lot of positivity. And I think that's positive for Tanzania, in my opinion.
Excellent. Well, yeah, good to hear some good news. And then sort of diving back to Richard. So Uganda, has delivered some very impressive growth figures over the past couple of years. I know we've been talking at a sort of kind of micro level about lockdowns and restrictions and challenges the last couple of months. But if we take a sort of 1,000 paces back, and I appreciate it's difficult to do as well to a certain extent at this stage, do we ever feel what the ultimate effect of the pandemic's likely to be across the wider economy? And for a sense, has this kind of helped you kind of determine how this might affect your long-term portfolio management strategy moving forward, whether it's around new deals, exits, net debt, debt to support ongoing companies, etc.?
Michael, we're still learning what's happening here, We don't have enough data to kind of drive us one way or the other, but I can tell you this. The central bank has cut back on the lending rates. I think it's now at 7%. Unprecedented. you have a lot of pressure now for commercial banks to cut down on the rates, and it's been really liberal in Uganda over the years. As you know, it's a buyer's market, in terms of investments and in terms of what's available here. But this is something really different. I mean, if people can't go to work, that affects your economy one way or the other. And I can tell you,
understood.
It's 50% down on what's happening. If you look at government offices, if you look at budgets that are happening, are being cut so that they can realign those funds into the health sector. That doesn't help the economy much. So yes, numbers are being thrown around. We're definitely not going to be at 6% as norm has been. I think we could be somewhere 3.5%, 2021. Sure. And to cap that all off, this is an electioneering year. So basically we're supposed to have general elections next year. And already that also is a factor usually in these East African countries. When you have elections coming up, basically business goes kind of that way because government shifts on how they're spending. And that's a big and huge factor. So we're still trying to get to terms with COVID, and then the elections are coming. It's a whole lot of confusion. But our investors understand this, and they're not in a box somewhere where they don't see these things. I think all our investors have the hand on the pulse. I think if I, for example, give an example, CDC has come in to help us. They've given some of our portfolio companies grants to deal with the COVID pandemic. I mean, we're doing PPE, we're doing training for all our frontline staff that have to go out and meet people. We're into sales and logistics. We're into basically pharmaceuticals. We're into contact with clients and things like this. So I think that really helps, and that tells you that they actually care about the companies and the staff that are behind those companies, and we really appreciate the efforts there with them. And so, but in terms of portfolio management, I can't sit back anymore. Basically, it means we have to hold hands with our ESCO teams and make sure that we give them the confidence that they need to traverse, this new situation that we're in. But that said, we're still learning, Michael. Ask me that again in February next year, and then I'll tell you what we will be doing about investment.
No, I understood, and I understand completely. I mean, I think for every business owner trying to navigate this almost on you're trying to do this on a day-to-day basis, aren't you? And there are so many different moving pieces, and and good to hear there's been engagement with your LPs, and
yes.
and that's been positive across the board, has it?
It's been very positive across the board. I mean, all of them are giving us a chance to, we usually have our AB meetings anyway in June, and we update basically our LPs on how we're doing and how the portfolios are doing. But the issue now here is what happens to deal sourcing. It's showing us now which are the real companies, what are the companies that can survive, pandemics, and what were the bad choices, what were the good decisions that we've made. So those are the areas we're in right now. I can tell you, all my colleagues are busy fighting the fires in all the portfolios that we have. And that being done, we also still have to look for good companies to invest, because we're not sitting back and saying we're not going to do this anymore. So it's that way.
Yeah, I suppose that there's one positive spin you can put on it there, which is anyone that continues to deliver kind of growth or frankly survival during this time is likely to be to have a very resilient business model. It's that old phrase, isn't it? When the tide goes out, you finally find out who's been swimming naked. And I guess that's happening, in the most extreme way at the moment. But well, hopefully that will be positive for future deals. That at least you can look at when these companies put on extreme pressure. you can see how people survive, and also see how management teams deal with these, because this is these kind of crises, they tend to either bring people together or expose challenges, eh?
I can tell you, Michael, we've been extremely lucky with our management teams. They've been stellar. They're solid. They're reacting to the heat. I mean, it's extremely stressful when you have to deal with employees who are distressed. They can't come to work.
Yeah.
They're not, they're worried about what's going to happen to this company. Is it going to survive this? And do I have a job in 30 days? Do I have a livelihood in 60 days? And these are young guys who are managing these companies, but we're extremely, extremely happy with the performances that they're all putting up. So I can tell you that I think we made some good decisions. I
don't know. Well, that's extremely positive to hear. And then Bahane, sort of flipping over to Ethiopia. We talked about the success in closing the Lion Brands deal, and what you've done in terms of reconfiguring or helping that company to reconfigure its operational base. But for you, kind of looking down the line, did you see COVID materially affecting your ability to secure, new deals, new pipeline in the coming months?
Okay, I mean, as I said earlier on, there's no lockdown, but private companies have been limiting meetings and been going online. So I think securing completely new potential pipelines in the next few months would probably be a challenge. And furthermore, in Ethiopia, it's all relationship based with businesses when you're trying to invest, and also information you get on companies is not all online and organized, and you always get information through professional and networking events. So this has become almost non-existent. So it's very difficult to find, to have your pulse on what's happening on the ground with different businesses. So, luckily, most PE firms and like CFS, you build pipeline companies through relationships, and so you build that relationships over time. And so, for example, the two companies that were the ceramics company and the Lion Brands, we've known the sponsors as a team for a long time, and it's something that we've been building over time. So I think we're going to rely on for the next few months on pipelines that we've already developed and are already in a relationship with. But if this continues for a longer period of time, the COVID pandemic and the way of working that we have for the private sector, I think is going to force us to be more dependent on our existing networks, the reputation of the fund on the ground, and things like that to actually secure new transactions. So I would say if we are in the same place a year from now, then it'll be challenging to get new pipeline companies, but you will be relying more on your performance of your existing portfolio companies, the networks that you have, and the reputation of the fund. So it goes to more the soft way of accessing a new potential pipeline, right? The hard facts of like going to the company meeting and visiting factories and all those things. So it's going to be a mix. And like Richard said, we'll wait and see what happens a year from now. But the key thing is to have had a strong pipeline now to take us through for the next 12 months.
No, understood. And given the challenges of getting out and meeting and engaging at the moment, I wonder, would it be helpful just to give us a very quick couple of bars on the type of investments you might be looking for? I'm just thinking of the 400 people that are listening. Someone may have an opportunity that it might be good to pass your way in the coming months.
I mean, our focus is manufacturing, agro-processing and services. And like it was discussed earlier on, the services sector is the one that has been hit the hardest in Ethiopia. And so we have to be very careful within services, which ones are going to be winners, at the end of the day in 12 months time. But those are the sectors that we're focusing on. And it's a growth capital within manufacturing and agro-processing mainly, yeah.
Okay, excellent. Very helpful. And I don't know, Richard, if you're in the business for looking for new deals at the moment, it'd be helpful just to give us a couple of bars of anything of what you guys look at in Uganda. Oh, sorry.
I was under mute, but I was going to say, like, you know, the things that interest us, obviously, manufacturing, you know, education sector, financial sectors, but the schools are now closed. How do I do a DD on a school that I'm trying to put an investment in? How do I ascertain some of the things that, you know, that I need to look at before we make an investment decision? And when is it going to be open for me? Remember, I have a period on which I have to deploy my capital, and I'm losing a year already on that. So, and that's a number of sectors that you really can't check out because they're not at 100%. So yeah. it gives us, it's a bit difficult now to have a good valuation on any sector, to be honest, because all sectors are kind of related to each other. So I think, I'm open still, we're agnostic. We can look at anything and everything, but now you're looking at a lot of startups, especially in fintech. I think a lot of businesses are coming up to take advantage of this new norm. If you look at, for example, delivery services, if you look at, you know, customer caring is going, you know, onto the handsets. Basically, you see companies like big companies that deal with customers are having their customer agents working from home and taking calls from home and basically eating up, you know, more data and things like this. So I think all these are new sectors that, you know, that now need funding, but they don't have a track record. And we're an SME fund. So I think this all comes into play 2-3 years from now. But as of now, is we have to deal with our old portfolio deals. We have to deal with the deal flow that we had in the last 18 months, trying to basically nurture those investees and see that we can, you know, make something out of it. Yeah, but it's tough, Michael.
No, understood. But helpful to know in any event. And Abdul, kind of again turning to Tanzania. So I was chatting to someone in the corporate finance space a couple of days ago. It's been quite active in FMCG historically, and they told me something quite interesting. That in their understanding, that they believe that actually for FMCG in Tanzania, it had actually been a better May this year than last year, which I thought was, you know, quite fascinating. So April. That being said, it's been a challenging few years for Tanzania for, you know, various reasons that
you know, it's an area that is really booming over the past, I'll say, past few years. I think the challenges need to be qualified. You know, as I mentioned earlier, you know, whenever there is change introduced, you know, there'll always be a resistance from people within and outside, and you will expect a hard hit. And I think that's what happened, I'll say, you know, early 2015, 16, 17. But I think, you know, we're starting to see, you know, the fruits of that in terms of how the business are being run. You know, the sectors that I mentioned earlier, I think as a firm, we have actually participated in a number of transactions. For instance, the agricultural sector, you know, some significant investments have gone in and some of them are greenfield. So that tells you the confidence that some of these investors are having in Tanzania, you know, and I remember this particular conversation, you know, with this particular client, and who actually told us, listen, you know, he's extremely positive about the country. The reforms that he's seeing in the country are very positive to him. You know, rightly so. You know, there'll always be some gaps that, you know, one will think that, you know, can be done better, you know, point taken. But I think overall, I think, you know, the changes and the push that he was seeing, the vision he was seeing in some of the sectors was extremely important. So, you know, that we spoke about the mining, and I think you and I had a conversation 2 weeks ago in terms of the positivities that you are seeing in the mining sector. I think that's brilliant for the country. And, you know, if you go back and look at the actual data, you know, you're actually seeing that growth in GDP in mining sector, which is a different story from what you hear, you know, outside the world. a couple of years back, or let's say 4 or 5 years ago, as an economy, we used to depend a lot on trade and services. But the new government actually said they really need to focus as a country on manufacturing and transport. And actually, you can see that right now, manufacturing sector has really picked up. So I think overall, I think we've been doing extremely well. 2017, our private sector credit growth, the loans that the banks were giving to corporates, SMEs, medium enterprise, I think really went down. I think we were close to negative, and right now we are close to double digits again. Or I think just pre-COVID we touched over 10%. That's a sign that how much our economy has been recovering. So a stable currency across East Africa. We had a presentation last week to one of our clients who's actually looking to invest within the region, and looking at the currency between Uganda, Kenya, and Tanzania. It's a stable currency. Has our liquidity being impacted by COVID? Absolutely. But having a stable currency at these difficult times, I think, is extremely important. Gives at least the business an assurance, that the profits or the balance sheet is not going to be wiped out from an extreme depreciation that the likes of South Africa have seen, where they've I believe they've touched 20 the last few months, which is extremely volatile. Coming back to right now, when you talk about elections, I think we know that for many of the African countries, elections it's a very sensitive topic, right? It's a huge risk that is seen not just by external investors, but also by companies and investors, coming from within the countries, right? I think, and I believe you tell me, I mean, you're from outside. I think you're probably very at ease. You're not thinking about what's going to happen in October, right? I mean, you're not thinking of slowing down in business. I haven't met a single client who has told me that they're looking to sort of slow down in their investments because of elections. So I think that's pretty positive for us. Post-elections, I think the government right now, they will try and, in my opinion, correct some of the mistakes which they have done, or some of the things which they can improve on for the last 5 years, and actually try to make it work in the next 5 years. And I think, we know about Zanzibar right now. They were expecting to have a new president there, and I think he's fresh. He's coming up with new ideas. He's gonna, link very well with the union government. So I think having two great minds at the top, I think it's going to be very positive for Tanzania. So as a firm, we are hiring right now. So we're increasing the number of people. Taking into account that that the growth that we're actually seeing in the next few months, we want to take advantage of that. And we don't see really things slowing down, touch wood.
Well, that's very, very positive to hear. And I was just reflecting on what we were saying with with Richard a few moments ago about the challenge of when the tide goes out, you see the companies that can survive and those that can't. One of the readings that I would have of Tanzania is, given the scale of reform and change here over the course of the last 5 years, that has put a lot of companies under pressure, given changes in liquidity and things like that. And an observation I would make is, I think that a lot of the resilience in Tanzania was tested even before COVID, and I wonder if that's one of the reasons we've been able to manage the crisis so well from an economic perspective. Because if you weren't a very resilient company in Tanzania, you had closed already a couple of years ago rather than this year. I don't know if you'd agree with that, Abdul.
No, I actually agree with you. I mean, I didn't, from the clients that we work with, we've seen some of them struggle, obviously, from cash flow, liquidity. You would expect that. But really, a few of them gave their employees unpaid leave. But in terms of businesses, all of them are back to normal. I have one particular client who, pre-COVID, he's looking to make a new investment in the manufacturing sector. And for him, he told us, actually, we are on this. Let's just look at what's happening in China and India. But the moment the borders are open, we're back on. So did he struggle during COVID period? Yes. Did he close down? No. So I totally agree with you. And I think that first, and I think, as I said, I think depending on how you look at, the changes that have been introduced by government, how do you look at it? Is it glass half full, half empty? I think from where we're sitting, it's definitely half full. And I think, it's only positivity going forward.
No, absolutely. And certainly, what I'm seeing is, a big growth in logistics, just, even just right now, because we've got open borders, Dar es Salaam port, goods can come in to the country, can leave the country. There are no constraints on that. And, with gold, potentially about to hit, $2,000 an ounce, pretty much record highs almost. I mean, it's a hugely beneficial thing for the Tanzanian economy. So, yeah, fingers crossed. Things continue on that tangent. So again, kind of taking a bit of a step back. It seems that despite all of these challenges, there are a lot of positive signs, and particularly when you look at this relative to how the rest of the world or certain parts of the world are faring. It's easy to look at East Africa as potentially being one of the world's most resilient regions, perhaps particularly when we're looking into 2021. And we I think every economy expects a return to growth, and not just a small level of growth, but very sizable growth when viewed on a global scale. But what we'll see is other countries remaining in a challenging economic place. I think there's a possibility with this. There's a lot of money around. People are still going to look for yield. And we could expect to see a new class of investors attracted to East Africa. What is there any advice that you would give to these potential people looking at investing in the region for the first time? Perhaps Bahane, if you wouldn't mind kicking us off.
Okay, thank you. So, I mean, what I would advise to investors first coming to this region is to really understand the key drivers of the economy. That's made them resilient in these kind of the times, and then look at the opportunities that lie within those key drivers. So, for example, in Ethiopia, the key drivers are the construction sector. The agriculture sector is number one, construction, and then services. And what we've seen is that services have been impacted, but not agriculture and construction. So I think when investors come to East African countries, to really understand the key drivers and where those sectors are, the sectors that within those drivers that are really making the economy tick. So, and then the other thing is like opportunities are, like you just mentioned, in Tanzania, including in Ethiopia, opportunities are increasing, over time. And even like, for example, in Ethiopia, the more and more sectors are being opened for foreign investors. And that means not only that sector, for example, telecoms and logistics, those sectors being open creates opportunities not only in that sector, but also in the supporting sector. So what I would really say is when they're looking to invest in East African countries, to really get on the ground and understand the developing opportunities firsthand, the existing and the new ones coming through liberalization and opening up of the economy. It's really important to understand holistically the opportunities when they come in. And another point I would make is also Ethiopia is also finalizing its 10-year strategic plan. So I think for any investor, if there's a document or if there's a strategy in place by government to map out where they want to get to in 10 years time and how, I think is a very important way to understand which direction the country is planning to go. So the key thing is like the existing opportunities, the new ones coming in because of sectors opening up, and then really look for the 10-year strategic plans or any plans that any country would have, and to have a holistic understanding on that to make their investment decision when they come to any country.
Excellent. And I know that there is with the new reforms that are coming through, I think are we still waiting for the underlying regulations with regards to which sectors are going to be kind of entirely open for FDI? And if so, do you have any feel for when they might be available?
I think the main sectors that were not open for foreign investors, there are quite a few people tend to think there's a lot more sectors that were not open, but the main ones were telecom, which the expression of interest, they're going through the process to privatize that. And then the other one is main sector was logistics. That has been allowed, and we're seeing interested investors coming into the country. And the third one is previously retail was closed for investors, even if you own your own manufacturing plant. But now they're allowing you to get into the retail outlets if you're producing locally, which makes a significant difference for companies like Lime Brands, where they have FMCG products and we can't control all the way down to the shelf price. So those are like the main sectors, and then the supporting sectors around that, like towers and services of the internet and things like that, naturally become open. So the announcements and which sectors are open now is done. These are the main sectors. The rest, manufacturing, all those other things are open. But the process has started, which is really good. Yeah.
No, absolutely, and but no major kind of liberalization of financial services for now, I'm guessing.
Not yet. Yeah, that's the only one remaining now. Yeah.
Yeah. Well, I think when that happens, it's going to be an exciting time. So fingers crossed for the future.
Yes. Yes.
So Richard, any advice for new East Africa investors?
I think the thing is, it's going to be a lot of manufacturing startups. I think the government here is pretty set on having very few imports. I mean, they want to balance the trade. I mean, a lot of imports coming in from the East. I think cabinet feels that, those are taking away from us, so they're going to tax them really high. So the place to invest now is, I think, in manufacturing, especially medium-sized manufacturing plants, to take care of FMCG kind of things. Also, a lot of money has been borrowed by government to invest in infrastructure. So construction companies, services, professional services, technical services. I think that's where the focus is going to be. I also see, because obviously of the new norm, we see that quite a number of businesses are opening up in packaging. Packaging is becoming one of those sectors that is growing. I think that's where we need to kind of be looking at. And financial services. If you have an economy that is struggling to get off its knees, you need capital, and not necessarily cheap capital. So that's where it comes in. I think I've seen some questions in the chat. People talking about, is equity going to be that much cheaper now because there's increased debt available? I don't know, but we need to see that. So I think that's where we need to be looking at, financial services, infrastructure, and manufacturing.
Well, access to capital is just so critical, and it's funny when I make a kind of holistic observation, and this is particularly true for Tanzania. I would say it's true for Ethiopia, and I would say it's probably true for Uganda, that we're almost in that strange situation where there's more money available for deployment than can find a home, and but yet we don't really have the necessary pipeline that we need to deploy that capital. So I mean, this is one of my favorite kind of messages. I just think the more we can do to think about support for early stage businesses, and for that reason, I would call upon anyone from DFIs who is listening into this. Support for early stage businesses in Tanzania, Ethiopia, and Uganda is probably the most critical thing that could be done in terms of providing a catalytic effect to create pipeline for you guys, because you can't put your money into startups normally. So we need that kind of money just a little bit earlier on, I think, to make a difference. Abdul, sorry, Richard.
Yeah, I think you're just point on, because that's where we're advising government to focus, is to help and first of all give companies, SMEs, amnesty to clean up their companies. and then give them the ability to professionalize. When I talk to USAID, when I talk to CDC, when I talk to Open Capital and all these others, I tell them, look, help small businesses to basically prepare to get into the market of capital, because they're just ill prepared.
Oh no, absolutely, and it's, dare I say, it's not just about doing it for 5 businesses or 10 businesses. We need to do this for hundreds, if not thousands, of businesses. And it's the funny thing that there is no shortage of money, and if that money is put to good use, it will create pipeline for you guys. I'm sure of it.
Absolutely.
I don't know if you have any views on that, Bahane.
It's very critical. When we look at early stage companies, obviously we can't participate in that, and the kind of support that they need in addition to capital as well is really something that could be catalytic, like you said, catalytic to get them to an investment place. So it's not difficult to grow these companies, early stage companies, but like you said, somebody needs to support them, de-risk, and then get their management team, their strategies done, and take them to the next level, which will be a good flow of pipeline for all of us.
No, absolutely. And sort of flipping back then to Abdullah and to Tanzania, we got a little bit off subject, my fault. But any advice for new East Africa investors, and I think any views you have on early stage companies in Tanzania and what more we could be doing to support them would be gratefully received.
Thanks, Mike. I think I agree with what Baran and Richard said about generally the general themes that they see within the region. I think one thing about it, for instance, specifically in Tanzania, the industries that are really vibrant and they are actually receiving a lot of focus strategically from the government. You have your agricultural sector, agro-processing, manufacturing, technology, even financial services. I mean, Tanzania right now, we expect to be about, let's say, 65 million people, and the projections by 2050 around 150 million people. So you can't go wrong with these numbers. When you come to manufacturing, within the demand is going to be huge, right? And I think that's the reason why our government is really focusing on pushing the locals and investors to come in to really start putting their plans and ideas together in the country and start pushing these sectors. I think one thing you'll agree with me, Michael, one of the challenges that I've seen, since, when I was working for Standard Chartered right now at Bankable is I think information is a very critical factor. And sometimes we'll come across an investor from outside who was in Tanzania, say 2 years ago or 3 years ago, and they will say, yeah, I came to Tanzania, I did this, and for some reason, I left because I didn't get 1, 2, 3 from a particular corporate, or there are no financials or anything like that. So I think we also agree that there's a way that local corporates used to do business in Tanzania, and I think over the past few years things have been changing, have been improving. And I think, like Barhane mentioned, a lot of deals that you close in Ethiopia, are based on relationship, understanding the real underlying factors driving the business rather than what you see on a piece of paper. And I think that's the same in Tanzania. And I think a lot of people who've been unable to do business in Tanzania before, they have been a victim of that. And we've actually seen that. And sometimes we even ask ourselves, how could we, or how could they get it so wrong and not see 1, 2, 3, or 4? So I think that second advice, I'll say that when they come in, I think it's important for somebody who, investor who doesn't know the nitty gritty about the country, I think to walk in with the right advisor, being a legal firm or a transaction advisor or even a bank, so that they can navigate through the various, information pockets, which probably they won't get directly. And I think through those relationships, they'll be able to uncover, the investments that could give them the proper returns over the next few years. I've worked over the past couple of years with Richard's team, and I think we've been communicating in various transactions. We're seeing, and even the feedback that we get from them, it's different because they're working with the right people. And even for some of the DFIs who come into the country, they made huge investments before. Some of them we ask, could have done better. Yes, no, it's a question that we're asking ourselves. Back to your question, I think the early stage companies, I think you mentioned quite clearly, I think they do need support. We have seen a few companies from outside and even within being, I think that they are actually doing that right now, trying to offer a particular advice in terms of either being from an expert perspective, financing perspective, trying to help them, attract funding from outside. And I think that's critical. The one thing which you also agree, Michael, and I think everyone here is, I think as a country, Tanzania, we don't have a strong number of intermediaries that you actually have in Kenya and Uganda, Ethiopia. The number of PE firms in Tanzania or the number of transaction advisors in Tanzania focusing specifically in corporate finance. Yes, you may argue that you have banks, but I used to be a banker before, and some of the corporate finance advisors that we had as a bank will fly in from London probably once every 6 months and look at one particular transaction. But the more you have in the country, the better it is, right? Because now we'll be selling information and what we see to Berhane or Richard and the other guys out there to tell them more about Tanzania. Will they all be successful? Probably not. But the more we sell, the higher the probability of closure. If you are selling 5 before, today we're selling 100. Then you're hoping, even if it's 20-25%, is still a huge increase for us in the country. So I think that's the other challenge that we suffer. And right now, I think that's changing. So I think one advice for investor coming from outside, work with the right guys who can actually help you navigate through our markets. Our markets are not very easy. They're also not very difficult if you're working with the right person.
Excellent. Thanks, guys. I'm conscious of time. It's 7 minutes past. I thought we might just dive into some questions now. First one popping up here. So it's from Lloyd LePage, Senior Advisor from Agri-Food Investment, Tony Blair Institute for Global Change. So the question is, we know capital is abundant to invest in African agriculture and the food sector, and yet there is a lack of investable deals or the ticket size is too small or early. What more do African governments need to do to unleash investment by funds in the private sector and to bridge the gap between government priorities and capital funds, private sector investors? I don't know, does anyone want to kick off on that one?
Okay, I think it's what we've just been talking about, how to deal with the early stage companies, and the governments, I think, can create conducive environments and get them investable to be an investable company. And is it through grants or providing access to capital to take them to the next level of what we just discussed to be ready for PE funds to invest?
And Richard?
Yeah, I agree. Just like Barney says, I think also the government, I think if you look at the government of Rwanda, for example, they have e-receipting, e-invoicing. This helps SMEs to actually have a start on having data that someone can start with when they're analyzing your business. I think the biggest issue here in Uganda is that somehow businesses are not keeping a record or a track record of what they're doing. They don't know what their market is, what size of the market that they are serving, because of a lack of follow-up on basically what they do. And usually sometimes it's because they want to navigate the tax regimes and things like this. So anything that helps companies keep records, anything that helps industries understand how big their markets are, what are the strains in the markets. We have the Uganda URSB, which keeps pertinent information about companies. That should be more available, I guess, to people like us who are looking to find fit companies to invest in. And sometimes that information is not readily available, or if it's available, you're not sure of the authenticity of it and how it's been gathered. But if everything is put in an open glass, and we know how this information is put together, and it's valid information. It actually would go a long way in helping not only equity funders like ourselves, but banks as well.
Okay, excellent. And Abdul, did you have anything to add?
Yeah, I think I agree with Baran and Richard. I think the only thing that I'll add is I think the one thing that government can do better is to create alignment across the various stakeholders on policy, plan execution, financing, and how they monitor all of this, historically and now. We definitely see that. I think one of the big challenges right now is decision making. Getting those decisions out there can speed up decision making for the investors coming here, so they can move on from one thing to the other without really saying that, I'm done with Tanzania, or I'm done with this particular country, I'm not going to go back. I think decision making is very key. I definitely agree with Richard on information. I think this has been definitely a big challenge even for us. To some of the transactions that we're advising our clients, we spend a lot of time helping them putting information together before even we go out. And you can actually see that how difficult this can be from the government as well. I think if these are the things that they can do, we definitely see a significant impact over the next months, years. Yeah.
Excellent. Next question is from Pearl at AHL Venture Partners, and this is for Richard Bahane. Will you be applying COVID-related discounts to valuations?
Barney, you want to go first?
Okay.
I can tell you.
I think it really depends on the sector and the type of business it is, and you can't have like a blanket statement that for all businesses you apply that discount. And then luckily the companies that we just invested in are not impacted but enhanced by COVID, so we were not applying any discount. But it really depends on looking at where the company is today. Is it temporary? Is a company like looking to, able to recover post-COVID? For example, if you look at, for example, a shirt manufacturing company, their performance might be lower today, but people are not going to stop wearing clothes after COVID. So the type of discount because we're long-term investors, we need to look at where they are today, and then, if their performance is really going to be affected, and then, in 2-3 years' time or post-COVID. If it is, then, you would apply discount today. If not, then you'll adjust based on the expected performance of the company in the short to medium term. So it really depends on varies from sector to sector.
Okay, excellent. Next question is from Arif Hamid. We have experience in Kenya where valuations, even for very early startups, are in several instances out of sync with the stage of development of their business models. No revenues, but operating expenses for 18 months. Is the experience similar in other countries? I don't know if Abdul, you want to kick us off?
I haven't, to be honest, I haven't come across a number of transactions at the moment, they're from a startup stage. So perhaps Richard, you'll be more in a position to comment on that.
Say again?
Michael, you want to repeat the question?
Yeah, I will repeat this. So Arif Hamid says, we have experience in Kenya where valuations, even for very early startups, are in several instances out of sync with the stage of development of their business models. So no revenues, but operating expenses for 18 months. Is the experience similar in other countries? So I guess perhaps what we're talking about there is people paying, arguably higher valuations for companies that aren't yet delivering serious revenue or profitability.
I want to tell Arif that that's a global problem. That's for every business owner, every startup, that's your valuations are here and you have no record on revenue, but you have a lot of cost. and you think this is where my business is going to be, so this is the values, especially in fintechs. They tell you all about these revenues that are going to come in 10 years, billions and billions. So they have a valuation of their 10-year revenue, and yet they haven't shown you what they can do in 2 months or 3. So that's everywhere, and I think that's the struggle for SME funds. Is how do you educate your investee in deal valuation? How do you show that we're being fair? That's really tough. But it's a relationship. I think I'll go back to Barani, is that then it depends on the relationship of trust that you've built with your investee, to be able to educate them, educate yourself about their business, educate them about the markets, capital markets and how equities work, educate them about exits, because most of them sometimes get hung up when you say, but I have to leave after 5 years, or I have to leave after 7 years. What does that mean? And who do you leave to? And so those are always going to be the hiccups that we find in the business of equities.
No,
So,
I guess it goes back to what we were saying about early stage companies, and private equity isn't generally the right model for backing early stage due to the kind of the risk reward analysis, because frankly it's far more higher risk, and you don't have the generally the history to operate off the back of, or to gain comfort. So it's about, again, having that financial cushion to back these early stage companies to create the pipeline for you guys in the future. Bahane, I don't know if you have anything more you want to add?
No, I think they've covered it all. Yeah.
Yeah, good stuff. So next question from Dennis Onyago at Acumen. To the panelists, thanks for dedicating this morning to share these valuable insights. Bahane, many congratulations on closing the deal under the menacing cloud of COVID-19. If I'm an investor seeking to deploy capital in Ethiopia, who are the partners and organizations you recommend I speak to, as deal structuring in Ethiopia is very nuanced? Thanks in advance.
I think it would be best if you could drop me a LinkedIn message or email, and then let me think about which companies would be best suited, and we'll let them know.
Excellent. And then from Kenneth Legacy, thanks for sharing the insights today. I want to ask experiences from the panelists and or others. What is the experience of trying to raise capital at the moment? Richard, I don't know if you want to kick that one off, if you have any views.
Our experiencing in raising capital at the moment, very challenging. First of all, DD becomes difficult for DFIs. I mean, they can't fly in. They can't do DD on us. The only thing that they can do is to have online DDs, like, these kinds of meetings. So it's tough for them to actually come and check what our deal flows are, how our portfolios are doing. And so they have to rely on our own track record. But we're doing that right now. And we do have committed DFIs into our fund too. So
excellent.
We've been lucky that that's going very well, despite the pandemic. But we're extremely positive, and we're charged up that we're going to do an excellent job, because I think that market in the next 2-3 years, like I said, is going to be a different market. I think we're going to have stellar companies, because the companies that will stay in the next 3 years are only the good ones. I think all the chaff is kind of going to stay behind, and then we're going to be able to do due diligence on companies that remain and basically have proven track records, especially through this pandemic.
Excellent. But Bahane, views on raising capital?
Well, luckily we've closed recently,
yes.
So I'm happy that we're not raising funds this year. But from what I hear from my colleagues in the industry is that it's quite challenging, like Richard said just now. And it's a new way of fundraising. I see a lot of events online for networking, meeting LPs, but I'm not sure how that effective is, meeting new potential LPs online is going to be very difficult, because usually do it at conferences and things like that. So I think it's going to be a challenging year, and maybe next year as well. And again, like I said earlier on, relying on network and reputation of your fund to source new deals. And I think it's going to apply the same for securing fundraising.
Absolutely. And Bahani, remind us, how much did you raise in the end?
It's close to 100.
Excellent. Fantastic.
Yeah.
And no. And Abdul, views on raising capital at the moment?
I think, Michael, I can comment from that. I think raising capital from a client perspective rather from a fund perspective. I think from a client's perspective, where the clients that we're advising, the last 3-4 months they've struggled from outside, especially from the on the equity side. So our focus really has been to find partners who are within the same industry. So more from an M&A perspective. But we've seen some reluctance, for the same reasons that Richard mentioned, for them to fly in to get a feel of the industry, the promoters. I think they've struggled to do that. We're seeing some opening right now. Some of the guys that we used to speak with who are actually looking to invest in equity in some of the transactions that we have, now they're back, starting to pick up discussions, and I think they're being positive about the outcome. They have seen the last 3-4 months. I think initially was pretty dull. I think everybody expected business is going to be down until November, December, and right now they're seeing some kind of activity and maybe light at the end of the tunnel, if you might say that. So I think it's been challenging, but we're seeing some improvement, in my opinion, from a client side. I'm sure from a fund side is a bit different.
No. I'd agree with your sentiment as well, actually, Abdul. I mean, and of course, for the lawyers, we tend to be involved right at the point of the deal being hot. And I have to say, we saw that April was quiet. And ever since, I would say, kind of mid to end of May, we've seen a gradual picking up. Generally, it's been new deals kind of gathering pace. But just in the last 4 weeks or so, we've seen a couple of larger transactions. These are still, interestingly, just Tanzania transactions. So we haven't really seen much movement in the wider region recently. But certainly from a Tanzania perspective, things are starting to gain pace, which is obviously fantastic. I think it demonstrates a confidence in the market. I think it helps that people can fly in and fly out, and it also shows that people aren't being put off too much by elections and things like that, which are positive. Esther, I think we've got some questions on YouTube as well. Would you be able to just share those with me again, if that's okay? So I think we just need you to just comment, and then those will pop up again.
So Michael, I have actually been sharing them. There's a whole list of questions.
Yeah.
If you go onto the chat.
So I am demonstrating my technological. So sorry, it's where do I find that?
All right, let me pose the first one as you find.
Got them. No, found them.
Okay.
Guys, everyone ignore me. Okay, so first question from Wambui Karanja, sorry. What is the impact on cross-border trade or investment? Richard, I don't know if you want to kick us off on that.
Come again, Michael.
Yeah, so what is the impact on cross-border trade and investment?
Yeah, as you all know, Uganda closed its borders strictly to traffic, public traffic, and only let goods cross-border. So we have had basically truck movements in. The traffic jam because of COVID testing stretches up to 80 miles into Kenya, out into Congo, probably 60 miles. So, but there's movement of goods in between, in borders. But the airports are not working for public transport. Basically, it's just cargo that the government lets in. So we're doing a lot of cargo out and quite a lot of cargo in. So all the companies that in our portfolio have not really had a challenge in terms of ordering and getting stocks in or getting exports out. I think the issue has been how quickly can you do it? I think previously, I think we had a consignment coming in from the UK, and because of the number of flights that are coming in, it had to be broken down into 3 batches, which means that financing imports becomes a little bit more expensive because you're paying 30 days before the goods can come, and then you have to wait another 60 days before you get them and distribute them, and that's all now within this period. So that's where the challenge is. A lot of business that are not well capitalized are going to possibly have dire straits, because of this. I see a number of businesses in the industries where we're keeping an eye that are folding because of that. But I think for the exporters, for example, livestock exports, agriculture exports, commodity exports, I think we've seen an upsurge. Those guys are doing a little bit better than previously. So that's the current situation, as I see it.
Excellent. Thanks, Richard. And then Bahane, I mean, what's the status of kind of cross-border trade, at least for Ethiopia? I know we mentioned, the huge success of which Ethiopian Airlines has enjoyed, but what about sort of goods crossing physical borders, and in particular, goods crossing the border from Ethiopia to Djibouti, which I know obviously is very important to, for maintaining sort of exports.
Yeah. So in regards to Djibouti, because of the increased COVID cases before Ethiopia's numbers started to increase, there was a lot of controls on the border, on the drivers and the trucks coming in and out. Even though it was not closed, the checks and the quarantining requirements caused delays of goods, moving in and out of the country. And also the borders are, around Ethiopia as well, are under close monitoring by the government. So it has caused delays and goods coming in and out of the country. And I'm sure like even the communities trading with each other across the borders have been impacted because of that. But one advantage, then the flip side, the advantage of this has been the reduction in the amount of contraband coming into the country, because there's more checks on every single truck coming in and out. So that has sort of helped the local manufacturers, because before they would be inundated sometimes with contraband goods coming in across the borders. So that has been a benefit, but it has caused delays. But I believe now that the route to Djibouti at least is becoming more efficient in terms of getting goods in and out. But the fact that Ethiopian Airlines has been almost like a cargo operator during this time has really helped the country in getting goods in and out of the country.
Excellent. I'm conscious we've got 2 minutes to go. So perhaps I'll just ask you for each a very quick kind of closing statement. But I think it's been a really interesting session. I think there can be no doubt about it. We live in very challenging and interesting times. I think it's been very interesting to compare and contrast the different experiences that we are having in, the various different parts of the region. But I would say that perhaps, one of the real themes that has come out has been one of, resilience, the benefit of testing resilience, and also I think a positivity that, despite the challenges of the coming weeks and months, there is an expectation of a relatively speedy return to growth. But perhaps Abdul, I don't know if you have any closing words.
No, I think we were extremely lucky to be here in terms of the business environment, what's happening. I think 3 months ago, we are in a very, very different situation. Things are really opening up. The question has always been, if you get your money in, can you get it out? And I think it depends on the right industry, the right sector, the right people, relationships. And I think everything is doable. And I think right now, I think more than ever, I think as a region, not as a country, as a region, I think working together has become extremely important. I think I think collaborating, sharing information, and opening up, business opportunities amongst the different, companies, firms. I think it's quite important. So I think, Tanzania, we're open for business, and I think we're looking forward to collaborating with partners who joined, and whoever wants to pop in some questions, we're here.
Excellent. And Richard, any closing words?
First of all, I would like to congratulate all those that have businesses and have managed to get through this period. I think these are hard times. No one has ever planned for this. Certainly for me, I've never been through being home for 40 days. It's never happened. It's just something new.
Drives you crazy.
Amazing. And I would encourage business owners, companies to really keep allowing change to happen, and learning from what's happening quickly, because this is not going to go back to normal. We have to basically agree that it's going to be a new normal, and the quicker that you basically adopt to what's happening, the better for you. Last but not least, we've opened EAVCA chapter in Uganda. So for our listeners and our viewers out there, take advantage of this by look out for memberships and see how which venture or equity funds are out there for you. This is the time now to look for alternative capital. Thank you so much for hosting us, and thank you for basically giving us a great time to discuss these things. It's always good to see our colleagues, Abdul and Barani. I miss all my colleagues out there, so it's nice when we can, basically look at each other and know that we're still out there and surviving. Thanks a lot.
No, thanks, Richard. And Bahane, any closing words?
Okay, I totally agree with Richard. It's good to see other colleagues going through the same issues, the same thinking. I enjoyed the discussions today, and thank you for the invitation. And just from the discussions we had, I think we've seen management that is coping to survive this time, and has been a really good way of learning how the business sector within Ethiopia has been adaptive and changing and trying to cope with these things. So some, even though they haven't made their targets or performed the same as last year or even lower, but I think the key thing is this COVID has challenged companies' management from their comfort zone they've had of things of being always normal and not having to think out of the box. And it was really great to see that management is thinking outside the box, which I think is the good side of COVID for the whole business community. And us as fund managers, I think standing by the sponsors of pipeline companies and portfolio companies during this difficult time is very key. And it's the collaboration and the support that Abdurrahman has said, not only amongst us, but also with the sponsors and with the companies, is very key to move to the new norm as we going forward in this East Africa region.
Excellent. Well, thank you so much to Abdul, Bahane, Richard, our panelists today. Thank you so much to the AVCA, and of course to everyone who has dialed in to listen and to ask questions. Esther, I don't know if you want to say a few words, or are we finished?
And just a quick thank you, and thank you to you, Michael, for moderating this fantastic conversation. I think the thanks have been sent all around, but particularly to you as well, just for being able to guide us through this discussion. And Berhane, to your point, and to Richard, yes, the EAVC is here for precisely that, bringing you together so you can be able to share your experiences and be able to touch base. And, I'm happy that you're happy to see each other, and I'm really happy to be a part of that. A special thank you to those who joined us via YouTube. I'd like to mention some of the names: Wamboi, Ross, Jared, Rogers, Biruk, Victor, Tangui, Ruari. We weren't able to get through to all of your questions, but we will certainly be finding ways to be able to send back some feedback based on the conversations that you've raised or topics that you've raised. But either way, we're very grateful to have you all. Thank you, Abdul, Berhane, Richard, for your insights and your time. I know you're very busy people, so I'm really grateful to have you here today. And I look forward to touching base and engaging with you again in the future. As Richard has mentioned, we'll be launching the EAVCA Uganda chapter in the coming weeks. So keep an eye out for that. We're really excited about that. That is our first chapter that will be sitting outside of Nairobi, and as we look to expanding into Tanzania and Ethiopia as well. Today we were joined by participants from all over the world, from America, Europe, South Africa, even Reunion Island. So a welcome to all of you and thank you. And I wish you a fantastic weekend ahead. Goodbye.
Thank you.
Thanks so much,
Thank
guys.
you.
Cheers.
Thank
Bye-bye.
you. Thank you, Esther. Thank you very much. Bye-bye.
Bye-bye.